What is an equity-linked savings scheme? An equity-linked savings scheme, ELSS, is a type of mutual fund that primarily invests in equity shares of companies. It is a tax-saving investment option in India that offers investors the potential for high returns, along with tax benefits under Section 80C of the Income Tax Act. ELSS funds come with a lock-in period of 3 years, which means that investors cannot redeem their investment before the completion of this period. ELSS funds also offer tax benefits to investors, as investments in these funds are eligible for tax deductions up to 1.5 Indian rupees lakh per annum under Section 80C of the Income Tax Act. ELSS funds are considered to be high-risk, high-return investments due to their equity-oriented portfolio. However, as with any mutual fund, the risk associated with an ELSS fund can be reduced through careful selection of the fund based on the investor's risk profile, investment horizon, and other factors. Investors should also keep in mind that ELSS funds come with a lock-in period of 3 years, which means that they cannot redeem their investment before the completion of this period. However, ELSS funds are a popular investment option for investors who are looking to save on taxes while also generating high returns over the long term. An ELSS fund or an equity-linked savings scheme is the only kind of mutual funds eligible for tax deductions under the provisions of Section 80C of the Income Tax Act, 1961. You can claim a tax rebate of up to Rs 150,000 and save up to 46,800 rupees a year in taxes by investing in ELSS mutual funds. ELSS mutual funds asset allocation is mostly 65% of the portfolio made towards equity and equity-linked securities such as listed shares. They may have some exposure to fixed income securities as well. These funds come with a lock-in period of just 3 years, the shortest among all Section 80C investments. ELSS is an open-ended equity-linked savings scheme with a statutory lock-in of 3 years and tax benefit. In addition to providing tax benefits and high returns, ELSS funds also offer several other advantages to investors. These include diversification. ELSS funds invest in a diversified portfolio of equity shares across multiple sectors and companies, which can help to reduce the risk associated with investing in individual stocks. Flexibility. ELSS funds come with a lock-in period of 3 years, which is shorter than other tax-saving investment options like Public Provident Fund, PPF, or National Savings Certificate, NSC. This means that investors can access their funds sooner if needed. Potential for high returns. ELSS funds have the potential to generate higher returns than other tax-saving investment options like PPF, NSC, or fixed deposits due to their equity-oriented portfolio. Systematic Investment Plan, SIP, option. ELSS funds allow investors to invest in a disciplined and regular manner through the SIP option, which can help to average out the cost of investment and reduce the risk associated with timing the market. Transparency. ELSS funds are regulated by the Securities and Exchange Board of India, SEBI, and are required to disclose their portfolio holdings and performance on a regular basis, which provides transparency and accountability to investors. Overall, ELSS funds can be a good investment option for investors who are looking to save on taxes while also generating potentially high returns over the long term. However, investors should carefully evaluate their risk tolerance and investment goals before investing in ELSS funds, and should also consider factors like the fund's performance history, fees and expenses, and portfolio composition before making a decision.